Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea. Really interesting Monday. We had a huge equity focus here, of course, with the stock market. Futures doing so well today. A little bit of fixed income. Thank you, Jim Caron, for coming in. We'll get to him in a moment. Lori Calvasina in with RBC Capital Markets, and she went up the income statement. I can't say how deficient I see out there the earnings focus. People toss around fancy words like EBITDA. Brockton, who produces for us, he's got a license plate that says EBITDA on it, just to impress the financial babes. Anyways, the idea is you go up the income statement. At the top of the income statement is revenue analysis divided into price and units. Lori Calvasina, RBC Capital Markets.
You know, I can't say on that company specifically, but when I do sort of my modeling, Tom, and in my earnings model, the revenue line is very much a quant-driven model. So we have kind of 5 different components. Yeah. And with revenues, the 2 most impactful macro variables are GDP and CPI. And so we're looking at real GDP and then CPI. We break them out separately. And both of those, if you take the assumptions up, it's going to goose your revenue number.
Lori Calvasina, I can't say over the weekend what it was exactly, but Atlanta GDP now looking at Q3 ending September 30th tomorrow. Inflation and GDP, the GDP number is just breathtaking. It's 3.x%, nowhere near a slowdown. All of that may be CapEx and AI and all that, but nevertheless, it's a buoyant third quarter to begin the earnings season. Jim Caron with us with Morgan Stanley as well. Jim Caron on the oddities of bank loans.
Within the fixed income space, we've been looking primarily at the high yield space and also bank loans. So bank loans are, it's almost like floating rate high yield. And in some ways, it's a shorter term reset on that. What I would say is that despite the fact that we think rates are coming down, we think that short term high yield credit, bank loans in particular, actually have more room to appreciate in price value over time as default risks stay relatively low. A lot of people like high yield. We do too. But we also like the bank loan debt, and we also like to barbell that by owning some short-term, high-quality government bonds.
Here's the reality, folks. Jim Caron read all 1,200 pages of Fibonacci. I skimmed each chapter. Jim Caron with Morgan Stanley. We're on podcasts nationwide. Look for Apple Podcasts, Spotify, and on YouTube podcasts. It's single best idea.